2%. Let's bring in Kevin Gray, senior markets correspondent, right away to help set up the action today. All right, KG, we are almost through the first week of December. Broad strokes, what's your take across markets?
Yeah, I would say obviously we had a really strong day yesterday. If you're looking at the broadening out trade, technology definitely was the laggard, but this market is really not seeing a rotation out of equities and going into cash. It's really kind of that last dash for the end of the year for a lot of institutional traders. So when technology is lagging or communication services is lagging, they're looking at other areas of the market. Energy performed really well yesterday. If you're looking even at the healthcare space with the insurance companies moving a little bit higher as well. And once again, I mean, this is kind of that rotation trade, but what I will say, Diane, and I hate dampening this type of move that we had yesterday, we're still actually in a range that we've been developing for the last 4 or 5 trading sessions here. And that range for the S&P 500 right now sits at around 67.90 to the downside and around 68.50 to the upside here. So if you're a bull, you really want to kind of move a little bit more aggressively to the upside, try to recapture that 68.75-ish area. That's going to break that lower high type of scenario that we have for this particular pullback here. Gives you a little bit more confidence that the market can move a little bit higher here. And I think the broadening out trade, as we do have this rotation, does actually help that for a little bit here, at least for now. Now, volatility is also coming in a little bit, sitting at around 16, so you're implying about a 1% move to the market to the upside or downside. Keep your eye on volatility this morning. I think if you do see a market where volatility is up and equities are up, that probably will signal the fact that maybe we start seeing a little bit more protection or hedging being placed in the market. And you can see that with the options flows today. So overall, it was a great day. Like to see that rotation trade still in effect here. But once again, you don't want to stall out here too much because we could be looking for a pullback here, especially with that Fed meeting coming up where we could have a hawkish cut, and that could actually pull markets to the downside.
All right, let's talk about the lay of the land when it comes to, President Trump's cabinet and beyond, essentially. So we've been across this Bloomberg report where Treasury Secretary Scott Bessent's name is now being floated for another. He's going to have a couple jobs. And there was a push for President Trump, or President Trump was urging, it seemed like before, the Treasury Secretary to take the job at the top of the Fed, but he doesn't want that job. So what's your take when you look across this one?
Yeah, so you are seeing the reports coming out from Bloomberg that we could potentially see Scott Bessent taking up the National Economic Council director role here if Kevin Hassett actually does get picked for the Fed. Now, this is not outside of the norm when it comes to this administration. There are multiple people that actually are the head of multiple different departments or roles within the administration here. So not outside of the norm. This also allows the cohesiveness when it comes to the economic policy for the Trump administration. Look, the market is already pricing in that Hassett's going to be the person that's going to be picked for the Fed. It seems like there's probably going to be enough support within the Senate to confirm him here. And you're just looking for these readjustments elsewhere in the administration here. Now, the National Economic Council director position does not actually have to be affirmed by Congress, so he could put whoever he would like there. But once again, it does appear that he does like the production and the role that Scott Bessent is doing right now. And it seems like if he's not going to take on the Fed, he's going to take on more roles within the administration, and rightfully so. It seems like the market is okay with that, at least for now.
Okay, let's get into some of the earnings that you're across. Snowflake, those shares under pressure in the pre-market, and the take that I'm seeing is that, listen, there was a high bar going into this. What are some of your takeaways here?
High bar going into this, and then also you are seeing their guidance moving forward. Margins on a non-GAAP basis are decelerating, or at least in the near term, and I think that's also a concern for the market here. The company did actually beat the top line revenue mark, coming in at $1.21 billion. Street was looking for $1.18 billion. And the adjusted earnings per share came in at 35 cents. Street was looking for 31 cents. Product revenue also grew by 29% on a year-over-year basis. Their guidance moving forward, once again, both top, bottom line above the Street's expectations, but the margin is a little bit of the concern there. And you wanted to see maybe a little bit more of an aggressive guide on the revenue front in order to compensate for the cut in margins that they are guiding for moving forward. That just was not the case. So you are seeing the shares moving back here a tad bit. Now, Snowflake has actually had a phenomenal job, done a phenomenal job this year when you're looking at price appreciation. So a pullback is not outside of the norm here. Once again, getting some of that froth out of the market. But I think that's really where the market is kind of focusing on or analyzing right now. It's the fact that you are seeing maybe a deceleration in that non-GAAP operating margins number that they did guide for. And rightfully so, you are seeing the market kind of pull back here a tad bit when it comes to this name to try to readjust for those fundamentals.
Okay, let's get into as well Salesforce. Now, Salesforce, I wonder if the bar was lower going into this, or is it just that we're finally starting to see, because shares moving a little bit higher in the pre-market here, finally trying to see some kind of payoff for patient investors in this one?
Yeah, you are seeing the shares up about 1.4%. Now, this was a very low bar coming into this report, but I think the guidance is really what's kind of putting this over the top, at least for now. The company has been known to guide at a single high-digit revenue growth on a year-over-year basis. Now their guidance is for low double-digit growth, which is really where the market wants to start seeing this company kind of move towards. Revenue came in at $10.26 billion, slightly below the street's expectations of $10.27 billion, but once again, at the end of the day, not that big of a miss here. The adjusted earnings per share did also beat. They also completed $3.8 billion worth of buybacks within the quarter as well, which is also going to synthetically improve the stock's performance. Now, their guidance moving forward, looking for fiscal year 2026, revenue guidance between $41.45 billion and $41.55 billion. That is actually higher than what they previously reported here. They are seeing an uptick when it comes to Agentforce adoption. The ARR nearly hit around $1.4 billion there, and then also an increase of 114% on a year-over-year basis. So they are seeing an uptick when it comes to the product adoption. This is a company that also has expanded their portfolio in an inorganic manner, a lot of acquisitions, and that has also been a cause of concern for a lot of investors, but they are starting to make some meaningful adjustments and some meaningful commentary when it comes to those acquisitions, and then also looking for efficiencies in-house in order to backstop margins here. So overall, it's actually a pretty decent report. I'm actually surprised that you're not seeing the stock a little bit more higher. We did see an initial reaction up to $260. It has pulled back here a tad bit. But let's see how the market actually reacts as the equity market opens here, and if some buyers really do kind of step in. It's really a stock that's been trading under its 200-day moving average for almost a year now. So you want to see some buyers stepping in, getting a little bit more enthusiastic around this name.
Well, maybe you're being a bit prophetic, because as you speak, it's starting to tick higher, so it's a little bit more than 2% higher right now. Look, I want to circle back to your S&P 500 levels. You kind of indicated, I think, what you're looking for, especially what bulls want to see, because you mentioned the range that we've been in. So let's talk about the levels that you're looking for today. What are you looking for to the upside and downside today?
Yeah, to the upside, 68.85. To the downside, 6,800 is still going to be the main area of support that's been able to hold here. Buyers have stepped in. So let's see how this market kind of pans out here. It kind of just depends on how you want to see this market develop, Diane. Do you want to see it concentrated in tech and communication services to push the S&P 500 higher, or are you looking for alpha in other areas? And I think if you look at these other areas, these other sectors and industries, some of the performance yesterday was really remarkable here. So once again, I think it's a mad dash for a lot of these institutional investors to try to get close to their benchmark before the end of the year here.
Absolutely. All right. That is Kevin Green, our senior markets correspondent. Thank you, KG, for the setup today and the deep dive into the lay of the land at the top of the heap in terms of the White House.